Look at some of the commodity names. They're doing extremely well. Not only is Reliance at the top of the pops up around 5% on the back of good numbers coming in from their consumer-facing businesses. Look at BPCL. That's up around 4.5%. We're seeing some traction in ONGC as well, which is up around 2%. And we are also seeing some purchase in names like Exide. We're seeing Whirlpool, which has surged. And we have Aurobindo Pharma and Indian Bank as well. But the stock on our radar is Chennai Petroleum. That's the next management on our show. Reported a strong set of fourth quarter numbers. The gross refining margins came in healthy and they're back to levels that we last saw in the first quarter of FY25 itself. So to discuss this and more, we do have with us Mr. H Shankar, who's the managing director at the company. Thanks a lot, Mr. Shankar, for joining in. Let's talk about, your GRM itself. It seems that crack improvement that you saw in January has sustained through this quarter. If you could talk about that, and how are you seeing cracks pan out in the very near term? What's your GRM target for the remainder of this year?
Good afternoon. Good that it's a very nice introduction you have given, that we are back to what we have seen in the Q1 of this financial year. So it makes me feel very happy that we are back in the reckoning now after sedate Q2 and Q3. But Q4 has been really good. And it's really not just the cracks which have helped us, but it is also a very good physical performance that we have done. We have given special emphasis on our operational excellence, which is very important to sustain a refinery like ours, which is a standalone refinery. So a broad information on the cracks position is that all through the year we have seen the diesel cracks varying between $9 to $12, and we have also seen the MS in the range of 6 to 8, and we have seen ATF, which is also about 8 to 12. So this is the general variation that we have seen. Nevertheless, we have seen various upswings and downswings in the cracks. We have seen the crack of MS going as low as $1 in the month of January 25, and we have also seen diesel slipping to $5 in the month of September. But on an average, quarter-to-quarter basis, I should be saying that the range is more or less predictable, and it is comfortable for us to sail through. Looking at Q1, it is very early now to say, but currently the cracks are almost in the same range that we are talking about, midway in the range that I have talked about. So Q1 happens to be in the same range for the next financial year.
Mr. Shankar, good afternoon. Thank you for joining in. Of course, this is the first time that you're speaking after taking charge. Mr. Shankar, so fair to say that the first quarter will be as good as the fourth, since you're mentioning that the cracks are remaining in the same range as they have been in the fourth quarter. So fair to say that Q1 will be as good as Q4, if not better?
I would love to say that, but looking at the kind of sudden change that we have seen in the crude position of the first week of April, but still now it is around 68, 70, we are seeing that. But we have a very healthy operating parameters available with us. So I really would love to say that, yes, we would like to have Q1 as good as Q4. Let's see how it pans out in the next fortnight or so, and then it would be much more easier for us to predict the movement.
What about the product cracks for, petrol, diesel and kerosene? How have, if you could split that up for the products, and at the same time, if you could also tell us a little about sourcing mix. Is there any impact of recent sanctions? And you did mention how the positioning changed in April. A large part of that had to do with all the geopolitical developments as well. So has there been any change or impact on your sourcing because of all of this?
Roughly, you can say we have about 50 to 60% of the crude on the term basis. And we also have about 15% crude available through the domestic availability. But we also look at the spot market, which is very favorable sometimes, and sometimes it's not so. But we have a very strong backup in the form of Indian Oil Corporation, our parent company, who is able to source the crude, which is the best available. We just place the requirement of what kind of crude mix that we would like to have to maintain a good operating level, and also to ensure that we make the best of the crude available in our operating scenario. So based on that, we decide what kind of crude mix we would like to take. And as of now, our predominantly the crude availability is coming from the Middle East, roughly about 45%, and also the 15% that I talked about from the domestic. Rest of the things we are sourcing as per the demand, which is my operating scenarios.
Mr. Shankar, you mentioned about the uncertainty in the crude oil prices as well, the massive fluctuations that we have seen So based on that, have you set yourself a target in FY26 in terms of growing your revenue, growing your margins? Have you come up with a target for that?
See, the crude, again, I'm going back to the previous financial year. Of course, it's easier to now do a postmortem of that. But if you look at the last year also, the crude had ranged from 70 to 92. That was a kind of volatility that we have seen in the crude. Now it is around 68. So we are almost at the same level. But looking at it, I think if we are able to sustain our good operational excellence, then we will be able to maintain a healthy performance in the coming quarters also.
Right, and final question before we let you go, sir. If you could give us a sense on the Kaveri refinery. There was a cost escalation of almost, a little over 10%, 3,600 crores or 12.5% was the cost escalation on a 33,000 crore project. You hold 25% in that. So how does that change your return expectations from this business? See,
Kaveri refinery, we had planned along with Indian Oil as a joint venture, and CPCL holds about 25% stake in it. So what we are looking at is if we are able to get this refinery up and running after the statutory approvals are available with us, which is now the MOPNG. So we are pushing it from our side, and also the major advantage that it brings to CPCL is that it will add almost $1 or $2 more to our bottom line. So that is a very significant improvement in our profitability as and when it comes in. So I think that is going to be one major project that will come in our hand. Meanwhile, we are also working on the value additions that is possible at our Manali refinery. We are looking at the LOBS project, which is in the final stages of approval. And once that is done, the coming years should be bringing in better operational flexibility to us in the Manali area also, which is an operating refinery at 10.5.
All right, Mr. Shankar, thank you so much for sparing time and joining us this afternoon. Wish you good luck for the rest of the year as well. The management of Chennai Petro. The Sensex now up 1,000 points. The Nifty at 24,330, almost a triple century now on the index. We talk more about that on the other side, but we'll be joined by the management of Indraprastha Gas before that. Stay tuned.